Today we've asked Craig Williamson from Genera to come in to talk about some of the things that you should consider before making a decision of buying an investment property. So thank you very much for coming in, Craig.
Thank you, Ray.
I guess we'll start with the basics. What makes a good investment property?
Firstly, an investor really needs to consider what they're looking to achieve from the investment. That's a great starting point. So spend lots of time thinking your situation, what you're looking to achieve, what time frame you're looking to achieve it over, etc. At Genera, we focus on three things with regard to investing in property. One is that we focus on the long term. So really we look as a minimum of 10 years to hold a property for.
Yep.
Property moves in a number of different cycles, so you've got periods of relatively low growth, and then you've got shorter periods of relatively rapid growth. You want to have as many of those periods of relatively rapid growth.
Yeah.
The second one is to focus on the total return of a property. Don't just look at capital growth, look at the income coming from the property, how that might change over time, so the rent, how that might grow. Also look at the costs. So you've got the costs of holding the property, but you've also got potential other costs that might come in the future, for example, a maintenance issue. So factor that all will give you your total return for the property, so look at that.
Right.
The last one, which is often not considered, is the risk.
Yeah, of course.
So there's different types of property and there's different risks associated with those. We tend to focus on the low to medium risk properties. We want those properties to perform in any market cycle. Some higher risk properties have a number of other factors that might come into play that can really impact the overall potential of that investment to perform well.
On those risks, what are some of the things, some of the pitfalls, I guess, that you see, common mistakes people buy when making a decision to buy a property?
Yeah, I mean, there are a number of things that people need to consider. One is to try not to bring their emotional or personal decision making into the investment decision. Things like, some people, we've had some clients, they wouldn't invest in an apartment because they say, well, I wouldn't live in one myself. Now that's turning your back on a whole different type of the property market.
Right.
And really, an investor doesn't need to consider whether they're going to live in it themselves, because they don't have to. All they've got to consider is that they need to find a tenant who will live in it. The other thing is, be open to looking at properties outside your area. Often homeowners, they'll only look at investment in the suburb that they own their own home in, or an adjoining suburb. Can work really well, but effectively you've doubled your risk within that area, because that market will tend to move the same as your home, so you haven't diversified your property portfolio at all. The third pitfall is, we often see, and we've seen it in recent times, is people chasing return without considering the risk. So people have invested in mining towns, but mining towns inherently are much higher risk, so they've chased the return without considering the risk. So that would be a third pitfall that I'd recommend people to avoid.
And on the other side of the transaction, so for those that maybe have just bought an investment property, they turn around, what are some of the things they can hang their hat on and say, look, we've made a good investment decision?
Well, unfortunately, as with any investment, only time will really tell.
Of course.
Property does offer some things that you can do to hopefully reduce the risk of making a bad decision, or increase the risk of making a really good decision. So firstly, as we said, understand what you're looking to achieve. What you're looking to achieve from that investment, and what you're looking to, over what sort of time frame you're looking to achieve that. Understand the numbers. Do the numbers. Do a few different scenarios on the numbers to see what it might cost you to hold, what the potential returns are, etc. Do a lot of research on the different options within that area, on the area that you're buying in, and don't be afraid to use a professional to assist you, because anything that helps increase the probability of making a good decision is a good
and it's a big decision as well, isn't it?
It certainly is.
Yeah. So I guess in summary, what would a final word or a word of advice you'd have for anybody who's maybe out there looking to buy a property?
Well, if they do think that their situation is right now for buying an investment property, then I'd recommend them to act. Time in the market is one of the best ways to deliver a good outcome, so don't sit and wait for things to happen. Be proactive and make a decision.
Fantastic. Well, thank you. We always appreciate you coming in, really appreciate your time, and great to hear from you.
Thank you, Ray.
Thanks, Craig.